Investors and traders, welcome to the channel Market Chat Pattern. Today is the 3rd of January 2023, and I hope everyone is having a great day. In this video segment, we are going to take a look at the key US tech stocks, which we always do for this video segment. And I will try to be quick for this video, so I might not cover all the stocks which we usually do, but towards the end of the week, I will do another video and we'll cover more of these tech stocks. So this video is for educational purposes only, and it is not a financial advice. Let's start with Tesla Motors. So Tesla, indeed, has been from a price action perspective. Tesla has just been trading in a trading range for quite a while, since late July last year, 2023. And it has held one of our key patterns, which is this ABCD price action, but there's also a possibility that in fact it might actually be moving in a channel formation, which is in fact a flag formation, and in this case it's like a bear flag. So ultimately, still bullish on the stock, and as long as this point D is held, let's actually take a quick look on the weekly chart here. Here we go. So this is what we were looking at. We're trying to, as long as this point C is held, the one-to-one price action actually takes projection actually takes us to around $340 to $350 per share level. So we have to respect this potential ABCD pattern. But then when we also look at there is also possibility that in fact it might also be a channel formation, as I showed you on the chart. Yeah, so watching this from a price action, and I'll keep you guys posted on this one. Let's take a look at Apple now, because it's been in the news. I believe it was some stockbroker which downgraded the stock. Perhaps it was Barclays, I don't know, please do correct me about this one. And here just quickly, let's take a look at it on the weekly chart. So we had identified this this pattern formation right here for a long time. You can watch the videos, and just for the new subscribers and people who are watching the videos, quickly describe you what this pattern is. So basically it is the 1.618 projection of this AB from point C, which we see here in the red line. And then we also have this 1.618 expansion coming around $200 per share level, which is right here. And then we had this another expansion of this entire range coming in around $200 per share level as well, the 1.270 Fibonacci expansion. And when we have a confluence of two or more ratios of patterns coming together, so always something we pay attention to, because it usually is a stronger resistance or support level. And in this case it happens to be a resistance level, and the market so far has respected it as a resistance. And look for how many weeks now it's just stalled there: week 1, week 2, week 3, and week 4. When we started this week, a rapid deceleration to the downside. Now the stock is really pretty much, it has retraced 50% of this entire move, and it's just hanging around the 20-week moving average around here. One of the things that I would like to emphasize is on that really key. This is when the stock formed a bottom beginning of 2023. This is what we were watching. This 128 to $120 per share level. This is a really long-term support coming in here. Look at how many Fibonacci ratios are coming together here. This is very strong. Until and unless this gets broken to the downside, yeah, sure, the stock can retrace, but it might not be, the price action might not be over for the stock for quite a long time. So again, this is what the situation is, as we see it based on the data which we have in front of us, and the key pattern. So just let's take a look at on the daily chart what to expect or what to see in terms of if we see any market symmetry here or any pattern formation. So what we are seeing is that today the stock was down as well, but look, there was some buying as well, and the selling pressure seems to be abated a little bit. And what we have got is basically buyers and sellers fought throughout the trading day, and couldn't really properly decide on the direction, and closed pretty much unchanged. So what could also happen is that if we just do a retracement of this swing, so it's been a fantastic move higher ever since from the 26th of October 2023. And if you look at the broader stock market, averages just ripped through to the upside. So a pullback could come in, and what we are looking at is just spotted something. Yeah, the other possibility which I'm talking about is this double top formation here, because the swing was taken out to the downside. So for a shorter term, just doing some expansion here, and there we go. Um, what we are looking at, where the market actually kind of stalled here, was right at $184 per share. Those were pretty much closed. That's the 1.272 expansion of this swing. Let me try drawing it to make it visibly easier to see. Here we go. And there's another possibility. Maybe it could move down another, above $4 or $5 to around $180 per share level. From a symmetry perspective, these are the moves which it had made before it found a decent support, and the bounced and then ultimately put in a good bottom, and that takes us to about 78.6% Fibonacci retracement around the $172 per share level. So 180 to 170 $170 per share level is the kind of shorter term we can see, but looks like because of this a potential double top formation here, there's a chance that actually Apple could maybe in a bigger correction for this entire rally it had since the beginning of 2023, and might actually bottom towards the second half of the year sometime. That remains to be seen, but there is a possibility for it, in my opinion. And here, if that be the case, then one of the things that we'll have to take a look at is one of the key Fibonacci retracements, where actually it could come anywhere in the region of 160 to $150 per share level. That remains to be seen, because these levels that we are looking at, we have to take one step at a time, one level at a time, assess the price action, and then evaluate the patterns. So first, these levels need to be broken to the downside if there is going to be that sort of a downside. But so far, is what we are looking at. These are the shorter term support levels that we are taking a look at. Now let's take a look at Microsoft. There we go. So in Microsoft, again, sideways action, and I think the price could actually reach anywhere between $360 $350 per share level shorter term. Taking a look at it on the weekly chart, so we had identified these levels, and so far the market is respecting this from a resistance perspective. Yeah, there is a one more level, about $400 per share level. Not entirely sure whether the market might actually shoot for this in H1. And I am still evaluating it. Maybe there is a possibility that Microsoft, although it's really into the artificial intelligence and looking at a fantastic rally, there might be a possibility of longer term top, but again, it remains to be seen. Not convinced about that yet. I'm doing my research, and as the year will move on, we'll have more data through price action, and then we'll be able to actually make an assessment. Let's take a look at Meta Platforms, formerly Facebook. So for this stock, here we go. This is the pattern that we were discussing. This is the three drives to a top pattern. Maybe you could also call it a wedge formation, or even some sort of ending diagonal, however you may want to call it. Last time this sort of price action took place around here, which was a very big top for the stock. Now, I'm not saying that this is going to be as big a top like this, or whether in fact it is a top, but the pattern seems to be working so far, and I hope we don't have a fall like this, but not overly from a price action perspective, because the pattern formation, um, chances are for lower prices for the stock, and a 38.2% retracement of this entire move from low to high is kind of normal. Let's just put 38.2%, and that could actually in fact see the stock move down to about 256 or roughly $250 per share level. We'll have to wait and see how some of these expansions might work. So there we go. Yeah, that's gonna be a pretty good support level, because we'll have the 38.2% Fibonacci retracement, and also 1.272 expansion of this range here. So yeah, there is a possibility that in fact the stock might actually be heading lower to around 260 $250 per share level, as long as this pattern holds, and not in the stop is not taken out to the upside on a strong closing basis. Let's take a look at now NVDA. Okay, so this stock again is stuck in a sideways trading range, and just moving on to the weekly chart. Here we go. We had discussed this one before, that this $500 per share was a pretty strong resistance for this stock, and we have this pattern formation here. In my books, this is the reverse point wave formation, and because it's pattern formation, and we have these Fibonacci expansions coming around here, this seems to be a pretty strong resistance. So far the market has gone just pretty much nowhere range bound, and there is a chance that in fact you see on the daily chart we have a gap around the $340 per share level, and the market might actually be heading down here for this stock. It looks like as long as this pattern is held, doing a very quick expansion. Yeah, we have the 1.618 expansion coming around here, so anywhere about 350, we have this structural support here, 350 to $340 per share level, 335. That's the kind of range perhaps this stock might move down to. And let's do one more stock. Let's do Shopify. Okay, so the Shopify, what we were watching for this stock was anywhere between 78 to about $80 per share level. 78 was this 1.270 Fibonacci expansion, and 80, a little bit above 80, is the 38.2% Fibonacci retracement. So far it has gone and met that, and now we see actually the stock being lower pretty strong in the last 3 trading days, and we just have the 38.2% Fibonacci retracement coming around $66-67 per share, where we also have some structural support here, but we also have structural support coming in pretty much where we are right now. So here we go. That's where the stock has actually found and bounced a little bit, but the chances are that in fact what it might be doing is, if we actually take the expansion of this, then we have a much stronger support coming in around the $66, 66, 65, 67. That's the kind of range where we have a 1.272 expansion and 38.2% retracement of this. So that's going to be the first stronger support, and if the support breaks down, then we could look at some other levels. So thank you very much for watching the video. Apologies due to time restrictions. Just want to keep the video not very long. These are the stocks we can take a look at, and then I'll do another video later in the week, and then we'll try to cover the stocks which we are not able to cover in this video. So thank you very much for watching. Good luck and good trading.